welcome Dinsho Irani from Helios AMC to talk about what he's making of the market right now. We've also got Manishi Chaudhary with us. Dinsho, hi, morning. We were hoping you would join us on cam and we would see that extra smile.
No, sorry, Aisha, I was in the middle of something and suddenly I got a call. Otherwise, I would love to join you on the cam itself. But thank you for having me on your show, and what a time to come into your show. By the way, we never had any doubts that the markets will be touching new highs in this year itself, in this calendar year itself. And as you must have noticed, we launched our small cap fund, where the first entry is going to get reported tomorrow for that fund. So we are that comfortable with the markets as such.
So Dinsho, stick your neck out. By the fiscal close, where would the Nifty be?
Oh, that's a tough one, but obviously higher than where we are today. So that I'll leave it there.
Well, okay, let's ask Manishi Chaudhary as well. And then she'll stay with us, whether he's also sharing that kind of optimism. Manishi, finally, we've ticked the box. The all-time high is here after a long wait of over a year. But what next? For those wanting to add positions, wanting to get back to the textbook instead of, take a relook at their portfolios, what should investors be doing in terms of their sector allocation?
Investors, and by the way, thank you very much for having me here on such an auspicious day. It's great to be here. Well, coming to your question, I think investors should be looking at three variables. Number one, earnings. Number two, earnings. Number three, earnings. So Indian market is clearly at an all-time high. Unfortunately, earnings estimates still haven't recovered. There is a promise, no doubt, that they will bottom out and begin to move up from possibly early 2026. I'm in that camp myself because there's a significant pivot that we have seen from the government, moving away from investments to consumption somewhat. We are also likely to see the RBI cut rates further. There's a lot of room that they have with this collapse in inflation that we've seen. And, all this should at some point of time translate into better consumption momentum and better earnings. But earnings estimates, apart from, I think, basic materials and the oil marketing companies in the last quarter, we haven't really seen an uptick yet. And so that is what I would urge all investors to focus on.
Okay, and Dinsho, hi, morning. What does this high indicate to you or tell you about the underlying market strength right now? Given that valuations are where they are right now, do they seem justified now or still look stretched?
So I don't think the valuations are stretched at all. We are at 20 times forward earnings, 21 times forward earnings. We've hit a peak of 25 earlier. I think we are at 10-year, 12-year averages today. So that's not the issue. As Manishi rightly pointed out, I think the momentum of earnings will take the market forward. And frankly, I'm not too disappointed with the September numbers that came out, though they were on a low base. But the fact is that 37% growth in small cap earnings, 25% growth in mid cap earnings, and 10% growth in large cap earnings. I don't think those are small numbers. You can always argue that there was the commodities and probably metals and stuff like that, but there were sectors like banking which pulled down the earnings and stuff like that too, right? So obviously it's a cumulative growth that you look at, and that's why I believe. And by the way, one more thing: this all-time high has been brought about despite the regular selling from FII. So it's purely domestic focus. So I don't know how the party is going to pan out, but once the FII joins the party, I'm sure it's going to be a real big-time growth happening. And frankly, I think the FIIs were probably looking at earnings growth. That is what was holding them back. And if they see that consistency going along, I think the December quarter should be looking at something like a mid-teens kind of earning growth. If that comes in, I'm sure they'll also join the party as such.
Manishi, this entire rally of the last 14 months, we've seen financials leading from the front. We had some of the front line of blue chips in the last 1.5 months, taking the lead. But we haven't seen the broader market, the mid caps and small caps coming into play. Do you see that now you'll see some kind of rotation where these stocks will also come into play?
Well, I mean, your point about banks is correct because I think banks had been, very long-term underperformer. We have seen, these large banks underperforming possibly for the last 3 years. So it is only now that catch-up trade in terms of the frontline banks outperforming is coming through. Now, as far as the mid caps and small caps, that point you made, I think if you go back to, let's say, August, September 2024, when India's underperformance started, it was actually the mid caps and small caps at the index level, they were hugely overvalued. So this underperformance that we've seen over the last 15 months or so, that was, again, it's just a pure and simple valuation correction. The earnings trajectory in terms of the forward earnings growth and what they have achieved, that's still better in mid caps and small caps compared to the large caps. So it's basically valuations that are coming to a more reasonable level, and I would call that a healthy correction. In fact, what has happened to the Indian market for past 15 to 16 months, I think, the grand outcome out of this is that India's relative valuation compared to Asia has actually corrected to a much more reasonable level. And that actually would possibly trigger even a degree of positivity from the FII side.
Right, absolutely. And Dinshaw, curious to know, I know you're launching a small cap fund, but small cap versus large caps, in the next 6 months, where do you think the outperformance is going to be?
So sorry, Aisha, the fact is that we launched the small cap because we believe that this time around, FIs will be coming and looking at more of active managers than going through the ETF route. That was the first conclusion that we reached. Secondly, I mean, if you see the underperformance of small caps vis-a-vis the large cap, or even the mid cap bucket vis-a-vis the large cap bucket, it's at 5-year lows as such, and that's again what drove us to look at small caps. And unlike other small cap funds that you've seen, we'll see a lot of new names coming into our portfolio. I mean, we've looked at quite a few names which are very different. I'm very excited about my small cap. You know what? I've realized that the analysts normally get into this mode of maintenance, and as long as you don't launch a new fund, they're very happy with that. Once you do that, they start overworking themselves, and that's why you see quite a few new names entering even our flexi cap and our large and mid cap and stuff like that. So that's what the excitement is all about. And if you ask me about which one vis-a-vis which one, obviously there's always a risk factor that is involved. So I leave it to the investor to decide. But my heart is in my mid cap and my small cap today.
Ninja, we're not going to let you go so easily. You have to give us some ideas from mid and small caps. Today, at least.
No, I would have loved to, Aisha, but the fund has not been disclosed. The holdings haven't been disclosed. So let that happen, and then probably I'll be more open to discussing the name.
I get that. Any large caps then?
No new names added to the large cap bucket. We are remaining with whatever we have. So that's all you know.
Yeah. Okay. Great chatting with you, Dinshaw. Thank you so much for your time today. Manishi, any large cap ideas that our viewers could look at?
Well, I mean, I wouldn't name companies, but in our Asia ex-Japan model portfolio, in the India sliver, we're quite big time overweight on the private sector banks, the leading private sector banks. We also like the consumer discretionaries, particularly autos, and think of the personal vehicles and the market leaders who have pricing power. We also like another sliver of the consumer segment, which is the hospitals and diagnostic chains. In fact, we prefer that in the healthcare side rather than the pharmaceutical companies. And finally, we do have the large conglomerates who are operating in, oil refining, in telecommunications, in retailing. You obviously understand who I'm talking about. So that is really the India sliver that we have in our portfolio. Conspicuous by their absence as IT services. that is one sector I think is at significant risk from the AI proliferation and adoption that we are seeing. And I would like to see additional evidence that, they're really stepping up their AI game.
Oh, yeah, absolutely. Manishi, great to have your insight, and thank you once again for taking the time out and joining us.
Thank you. Thank you very much.
Okay, all